Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Sunday, April 23rd, 2023. I apologize for my delay in getting this update on, but as you can see, the markets are open and my quotes are not functioning. And so I had to spend some time checking in with the help desk at TD Ameritrade, and they're having a problem with the quotes. So I can still do the update, and I can just start by saying that the market is opening down, not that much. The NASDAQ opened at 13,060.75, actually a little bit higher, sunk down, now moving back up. S&P has been as low as 41.48. And again, now moving back up, trading at 41.50. So, and if I was new share, I don't want a new share, resume share. There we go. Now we're back on. So let's just dive in here. I'm going to start with the NASDAQ 100. The count and the moves continue to be extremely difficult. On Friday, it was up, down, and all around, and ended up being bought back up at the end of the day. I'm going to start here on the daily chart. No big changes to make. We continue to mark the October low as the completion point for primary wave A, which leaves us within the move of a primary B wave move, and that's a counter trend rally. Within that, we have intermediate wave A and B done. We remain within the C wave. And in actuality, we are most likely within the final fifth wave up. And so here on the daily, you can see that I've marked minor 1, 2, 3, and 4 within that minor fifth wave. So right now, what I've got up are the Fibonacci extensions for a C wave. Those have been pretty standard here since March. So since the middle of March, we've had these same extensions, these same goals, or these same levels that the NASDAQ should eventually get up into, and it has several times, but now we're definitively stuck in a range from 12,977 up to 13,250. So, excuse me, 13,350. What that one is? Yep, 350. So a little bit of a tight range for the NASDAQ, and it's been in that mode since the beginning of April. So again, we have not really shown any propensity for sliding lower and breaking down and going lower, or finishing the move and breaking above that 13,253 level. So that's holding us topside right now. We have gone above it, but we've slipped back below it. And then again, that 12,977-ish is holding us to the bottom side. Actually, we have been below that. So we've gone below the ranges, but right now we're sitting tight within. I'm going to bring this down to the 1 hour chart, because that's basically what we're dealing with. And I'm, yes, shifting the count around to try to just put it into an area where that the market's actually going to trade off of. And because I'm continuing to allow for additional upside, I'm trying to keep it in a realm of what I would consider reality. So I have moved the wave 4 over and now moved the wave 4 back. So it makes a more complex fourth wave. And then we're in finishing. Again, it's looking like it's going to be a diagonal, because there's the A, the B, and the C for wave 1. And then we have 3 waves down, accumulating at the lows from Friday, early in the session, at 12,982, and then the market just spent the balance of the session moving back up to close out that Friday monthly expiration. So we don't have anything in between that's really going to suggest one way or the other, but I'm now going to start to add Fibonacci extensions if indeed we're going to see a third wave, and if indeed this is going to be more of a diagonal, then we're going to be looking for a top, and we can start putting in our diagonal lines. So, but for right now, I'm going to put in what I would estimate for the wave 3. And that would be wave 3 of 5. So minute wave 3 of minor wave 5. So again, normally I'd be looking for probably that wave 3 would at least be 100% of wave 1, and that takes us up to 13,354. So again, we're breaking above the top of wave 3, which we need to do, and that is that 13,350 number. This would complete and get us there. If it comes up, it should be, if we're going to be in diagonal, it should eventually form 3 waves instead of our impulse 5 waves. In a diagonal, that's what I would be looking for. But again, if it turns out to be 5, then that would be, we'll have to live with that and work with that. But again, 1, 2, we get a 3, a 4, and a 5. So we continue to have our zones for completion, again, under this current labeling. I know I keep switching the labeling around, but this has been a very, very difficult move to calculate and to even forecast on an intraday basis, as the market is just too uncertain on many, many, many different fronts. But right now, what the market continues to hold out for are the continued earnings. So this coming week, starting on Tuesday, we have Google and we have Microsoft. And then on Wednesday, we have Metaverse. And then on Thursday, we have Amazon, Amazon and Honeywell. Those are the big out of the markets that I include in on my watch list and on my daily stuff. Adobe, I can't find where they've announced. We have AMD out further on the 2nd of May. We have Apple on the 4th of May. We have other larger companies. I'd see Intel. Intel's coming also on the 27th. So that's another one for Thursday, would be Intel. And Shopify, we have on the 4th of May, so they report on the same day as Apple. Tesla's already reported, and the balance, I guess, basically of the bigger companies that I follow are also going to be coming in. Now we have NVIDIA that comes out late. We have AMAT, which comes out on the 18th of May. So we have a bunch that actually come in on the tail end of the cycle. So back over to the charts. The bigger titans are going to be really reporting this week. And for this to really kind of take off, we have to be looking at the fact that some of them are going to come in with decent earnings and decent forward guidance. Those have not been playing out. We have now seen some companies where they actually are beating expectations, but forward guidance, or they're beating on earnings per share, but they're missing on revenue, et cetera, et cetera, et cetera. So, last time that Metaverse reported, of course, they announced their stock buyback. And that's what propelled the stock to really start to move. Not sure what they're going to support it with this time, other than this is the year of efficiency, quote unquote. That's from Mark Zuckerberg. But he continues to lay off massive amounts of employees. So again, overhiring is now coming back to haunt them, and those people are now losing their jobs. The other thing that I think it also affects is that just the cost of the employees that they have and their real estate. They, I believe, probably have a lot of empty buildings right there on that huge campus that Metaverse has down in Menlo Park, which is just part of Silicon Valley. For those of you that are not from the area, they built very, very big, large floor space, all prior to the pandemic. Not sure how much is empty, not sure how much is available even to sublease. Here in the city and county of San Francisco, they leased 2 entire buildings that were under construction prior to the pandemic. They made commitments to them. Those leases are now in effect. Those buildings are still empty. And from what I understand, that they're trying to sublease, and there are no takers. Within San Francisco, the vacancy rate for commercial real estate is over 30%. And that's pretty high for the city, but that's pretty high as an average. Also, what we're confronting is that there continues to be a lot of stir and a lot of notice being given to commercial real estate, because that could possibly be the 800-pound gorilla in the coal mine. And from what I understand, and I would take a peek at, that gorilla is coughing and choking a little bit on that coal dust. And what I mean by that is it could be the next black swan event. What we saw in 2008, 2009 were mortgages, consumer mortgages, mortgages from people that really should not have been able to afford the homes that they had, or the mortgages that they got taken for a ride. And within a very, very short period of time, when the real estate market began to collapse, most of those houses went in what we call underwater. In fact, the value of the house, it fell underneath the value of the loan, or what was owed to the banks. And so we saw a lot of foreclosures. We saw people actually walking away because the banks refused to negotiate with them, or even just negotiate the loans that they had to keep people in the homes. So it turned into a debacle. It turned into a very, very severe situation that in 2009 culminated in a financial collapse. And we saw bank failures. We saw a lot of things take place. So this is sitting on the back burner right now. And a lot of the loans that we're discussing, that in terms of commercial real estate, they're going to start hunting for refinancing. And that'll come sometime in the next, second half of 2023 and throughout 2024. So this could advance very, very quickly as we're sitting on the cusp of moving into May. So time is going by very quickly. And so the situations are not improving. So what we're seeing is that the market is trying to be held up because the hope, the whim, the whatever, that these tech companies and other companies that are still to report are going to be able to carry the market higher. And it may be momentary, it may be whatever. So I am continuing to allow for additional upside here in the NASDAQ and also in the S&P. But the patterns are now beginning to fall into place between the Russell, the S&P, and the NASDAQ and the Dow. We're seeing they push it up late in the afternoon to get an expiration that still is attached to 0 DTE options and things of that nature. On Friday, it was a little bit broader in terms that it was a monthly expiration. So we had all of the underlying companies putting, their options were expiring on Friday as well. So it was a little bit bigger. And they got pushed up. They got pushed up to where the market felt that it needed to have these expire. Case in point would have been Apple. Apple traded below 165 for most of the day. In fact, it closed down $1.63, but it was down over $2 for much of the day. End of the day, quickly purchasing it back and buying it back up to get it at 165 so that it would expire, and those options would expire so much they were in the money. And whether that was because the shorts wanted to be able to sell the stock on 165 to whomever, because there would have been an automatic exercise. So this is going to be interesting to see what this stock does tomorrow. Coming out of expiration, what's it going to look like tomorrow? We shall see. Now, I am allowing for the upside. The upside needs to get taken off. If we're in the third wave, it shouldn't lumber around. It shouldn't just be more passive. It should not be in the fact that, let me just kind of go this way and just share my screen. And I'm going to take this one down, and we should still be able to see my NinjaTrader screens. And you can see that we're trading at 13,065. So granted, it is the Globex session. It's the very beginning of the Globex session. We don't have the Asian markets don't open for another hour and 15 minutes. And then we have Europe that's opening up much later during the night. that I would not be expecting the market to labor inside of doing nothing. So I am just 1 second because I want to make sure that my screen is now really being what I want it to. And there it is. Now I got the green line. That's a good deal. So again, not much going on. In fact, we're pretty much just kind of sitting. And now actually my quotes are working. Yay. Think or swim. You came back. So we're trading at 13,064 right now. And we need to get moving. And a third wave, it needs to get moving. Even if I open this up on my hourly, that's nothing. It's kind of like doing nothing and just sitting here. I'm going to let that be when we get everybody else online, and possibly tomorrow morning when we return. I'm going to be looking for it to start to move, and it needs to move quickly. It needs to start getting itself up here above 13,100, above 13,200, and closer to 13,300 just to finish this third wave. So if that's the completion of 2, 1, 2, acceptable. 1, 2 would be acceptable. Completion of wave 2 should be a move below 13,055, and then we're putting in a wave 2, and then we start to go yet again, and it needs to pick up the pace. Moving averages, flat. All of them flat right now. So it's a very, again, I'm just going to tell you, it's a very strange system and what's going on. And we will see how this all plays out very shortly. So in any case, I am thinking the same thing here in the S&P. We are starting what could be wave 5 up. Now, here is the deal with the S&P. I can't declare this dead gone, this triangle pattern. It holds within it. And very possibly we're in a fifth wave that could hold, still not get that far above. Right now would be approximately 4192, 4195, and still hold below 4200. Now, as to keep the triangle pattern in place, if this is going to be A, B, C, D, E, wave E cannot go up and break above wave C if this is the deal, if this is the deal. And that's going to come in at 4250. So if it's going to spike, it's got to spike and hold itself below 4250. If indeed this larger triangle pattern to complete a primary B wave, and again, I'll just move it out to the daily, I can show you. This A would be over here. This X would become A. These would become wave B. So it would be minor degree ABC. And that would be a B. Minor degree ABC, this would become C. Minor degree ABC, this would become D. This would be 1, A, B, and then we'd be 1, 2, 3, 4, and a 5. And that could be doing a diagonal all in its own. So we've got a lot of what I'm going to call junk going on that could come and finish this move. But the market continues to hold out for some levels that I'm not really sure about. In any case, that's kind of the story. One thing I want to start to bring to your attention, and that's over in the bond market. So I'm going to do a little bit, making this a little bit longer. We're going to include some additional markets. So it's kind of like a big picture update, but very, very condensed. In the bonds, the feeling has been that this October low completed an intermediate degree decline, or the first 5 waves down of that decline off of the all-time highs way up here. And then this would have put this into a stronger ABC to form an intermediate B wave. It just kept failing, and now it keeps failing and threatening the downside. And then I went over and I took a look at the 30-year yield on a chart basis. And I took this actually out to the monthly chart. And when I look at it on the monthly chart, it didn't, this would be those October lows. And I've got 1, 2, 3. I'm like, oh my God, look at this. It's because it's holding, 3.66. Can't get above 4, much above 4, I should say, but it's not dropping. And so it either needs to get itself on the yield basis, it needs to continue to move lower if it truly was in the counter trend move, which would be corrective in terms of rates, and then the rates would be dropping. But we're not seeing that. We're not even seeing the hint of it. Every time they try to move it higher, the rate just comes slamming back down. So I counted it out. It's a 1, 2, 3. So going back to that initial 5 waves down, we're looking for an A wave up, a B wave down, and then a C wave up. And it's not done with that initial 5. So this 5 here is the low, the rate low, the bond high. And I should leave this where it is in terms of the rates. But if I go over and I look at the bond market now, it turns it into a little bit different of a picture. Here we are on the monthly chart. And I'm going to take that off so we can see this. I'll put it back on and take that one off so we can see it, put it back on. This pattern, I was a little bit shocked on coming out to the monthly chart. And when I saw that, I was like, oh my God, that is a shooting star. Reverse, but it's a shooting star. And the position that it's in and the fact that it's bearish or red suggests that it's going to be continuation. That drew me to recount this third wave. And I put in 1, 2, and then a 1, 2, 3, 4, 5. That's only the third. This is a 4. We're now still looking for the 5 to put in the initial 5 waves down to complete off of that low. And then we're still looking for those rates to continue to rise. So over the short to medium term, I'm now looking for a new low in the bond below 117, which was the October low. 117.19 to be exact, was the October low. We need to get down below that, put in a wave 5. So you can quickly throw in some fibs here, and one of them would be for that wave 5. What does it look like? Well, we go right to there and there. We have 115.16. That would certainly fit the ticket. And it would be a pretty strong drop. And it's going to push the bond, it's going to push the yield. When I go back over here to the yield chart, and I know this, I'm doing this quickly, and it's going to be a little confusing, but I was hoping to have a little bit more time, but I want to get this all published. So here is the fibs on the yield. If they're going to do a 5th wave up, I forgot I should put a 4 right there. If indeed the 4 is done, I got to leave it a little bit more room, which is why I don't do it. But if I'm using that low, Friday's low, as the completion point for wave 4, then what are we looking at? A 50% rise, where wave 5 would be equal to 50% of wave 3, brings us in at 4.83%, or 4 7/8, we'll call it, percent. And then if we keep moving that up, you're going to see a 618, where wave 5 would be 618 of wave 3, very, very common in terms of Fibonacci. You're looking at 5%, 5 1/8%, actually. So again, we've got that 5% staring us in the face. And so it should get there, then we will get a stronger counter trend right now, decline in rates. So the rates will go down and the bond prices will go up. But I believe that we still have this one additional move to do prior to that happening. So a lot of stuff going on. a lot of stuff going on in the markets, and there's just throwing a whole lot of confusion because we're getting a great deal of discussion about interest rates, about what the Fed's got to do, about what should be happening. Well, we got a failing bank sector. We're getting notice now that they're now going to be expecting even a lot of the regional banks to start to go down. I mean, this is serious stuff. And these are analysts that are talking about this stuff. This is just somebody off the cuff making these things. These are analysts that cover these sectors. And they're talking about some very, very dangerous things. Now, gold, on the other hand, hates uncertainty. And actually, the dollar going down is favorable for gold. A rising dollar is not favorable. Well, you begin to wonder, it's like, what did they see last week? We reached up here and then bam, and then bam, and then bam. On Friday, we had another strong down day. Yep, they're recovering a little bit, but it should. So if indeed we're in a minute 1 and 2 and we're in that minute 3, it's going to consist of 5 waves of minuet degree, and there's wave 1. So we're back in a second wave. What can gold do? Well, we got support at 1973 and then 1945. We've got past the 20 and we've got the 50, the daily 50, sitting at 1959, we'll call it. But below that, we have fib support at 1945 and a half. And then we don't have 618, which is more common, 50 to 618% of the first wave for second wave. That puts us between 1945 down to 1917. So once again, gold does a 150-point reversal just before it goes and launches one more time, or another time, I should say. So we have a lot going on and a lot of confusing messages from gold, from the interest rate front, from the dollar, from all these different things. I hope to make a longer term or just a longer big picture update. I know I owe it to you guys. I apologize, but I continue to just recuperate from some pretty serious stuff. And it's like, as I mentioned to you, I had pneumonia. That's now supposedly on the mend, but it's going to take a little bit longer, et cetera, et cetera. So I will get there. But I've not been actually had a whole lot of energy where I could sit and just start updating and running these. But I've started, as you can now see. So I'm going to end it there. I'm going to keep this a little bit as much as tight as I can, but I wanted to make sure I included gold and that finding. And it's the same finding, by the way, in the 10-year note. So the 10-year note may have to do some catching up. So the other thing that may happen here, which would probably be not a bad thing for bonds, is the yield, the inversion, the invert, the yield curve being inverted may flatten a little bit here. It may flatten because while I'm expecting some activity, of course, in the 5-year and the 2-year note, it's the 2-year and the 10 that kind of really form that inversion. And if I'm thinking that the 10-year note is going to drop, and the 2-year note will probably drop, but not at the same intensity. The 2-year note, I believe, really has already completed that 5 waves down. Maybe not. I'll keep an eye on it, but we might see a little bit of a contraction in the yield curve, in the difference. But right now in the 10-year note, it also is projecting lower levels. And they're really, coming down here. So even if we're thinking that this 4th wave, if I'm going to put the 4 here, then I'm looking for, going to be wave 1, and this is wave 2, and we're going to start in a 3rd wave down, although I think this is 1, 2, 3, 4, and we're going to come down here, put in this 5th for the first leg, for the first wave 1 out of 5 that I'm looking for within minor 5, minute wave 1. I think it brings us down to 113.185 in the 10-year note, maybe as low as 13.120 in the 10-year note. Then we get a wave 2, and then we get a bigger drop. So this is going to take some time to unfold. This I don't believe is going to happen in a day, but all of this is going to get taken out. And it clears up a lot of things that were going on. And like, why isn't this thing just kind of going, or why does it stop and just collapse off of that 117 area? Right, got up towards 117 there, and then got as high as 116, almost back up to 117 here, and then just kind of died. died on the vine. So a lot going on. I'm going to end it right here. And thank you for listening. Sorry for the lateness coming on, but at least the quotes are back live. All right. Our next update will be on Monday, April the 24th.